Welcome to the mini class series, Multiple Sources of Income. I'm Millen Livis, Financial Independence Mentor. I guide women who want to have bigger lives free of money insecurities and restrictions, who want to become financially independent and financially powerful. So today is our fourth class in this mini class series, and today we're going to talk about rental income, rental real estate income. So before I begin, I just want to tell you that you may want to take some notes. So I suggest that you have some paper and pen ready if you want to take some notes. I think you may. Okay, so before we begin, who do we have live today with me? So if you could just say hi and where you're from would be wonderful. I see that we have several people live. So say hi and I will get ready to begin today's class. Okay, I see Verilyn, Zina, and Cheryl. Hello, ladies. Great to have you with me. All right. Okay, so let's begin. So you receive rental income when you rent either your apartment or your house or room in a house or building that you own to other people. That's how you receive rental income. Okay, so why rental real estate is one of the fastest pathways to financial independence? I believe that this income source is one of my favorites because it not only allows you to receive income, but it also incorporates value growth potential, right? And that's why it's the fastest. I think is the fastest pathway to financial independence, because you receive the income and your asset value appreciates over time, because usually that's what happens with real estate. And not only that, another thing that I really like about rental real estate is that you have multiple streams of income from this source just by having multiple properties, because each property is a separate independent stream of income. And if you have, and I believe in income diversification, so if you have properties that located in different geographical areas, it's even better because you diversify not only by different properties, but also by geographical location. All right. So that was point number one, why it's one of the fastest ways to create pathway to financial independence. Okay, so next, let's talk about why many people shy away from rental properties investment. So I know that many people afraid to invest in real estate. You know, maybe they had bad experience for whatever reason, but some of the common reasons why people shy away from investing in rental real estate is because they feel that it requires significant initial investment, number one. Then many people feel that it's risky to invest in real estate because at least in the United States, a lot of people got burned by investing in real estate just before the major crisis that we had in 2008, 2010 period. And also because they feel that it takes a lot of work, right, to be a landlord, to be the owner of real estate properties. And I can tell you that, and I teach this in my real estate training, that there are creative ways to finance properties. And number one. Number two, is it risky? any investment is risky, and that's why when you know how to manage your risk, you can mitigate it, right? So investment is very important, and real estate investment is not the riskiest investment out there. And you also can diversify within your real estate portfolio, so you mitigate your risk by having diversified income streams. And that it takes a lot of effort to manage real estate properties. I can tell you that I systematize my real estate investment business to the point that I can live in different countries and enjoy my reliable passive income streams from my real estate, rental real estate portfolio. So it's all relative, right? Like everything else in life. All right, so do we have any questions so far? Let me just check if we have any questions. Okay, I don't see any questions, so great. So moving along. Now let's talk about how you can turn your rental income into passive income. I just mentioned that for me, right now, it's a passive, reliable income. So basically, yes, if you don't systematize your rental real estate business, then it may take a lot of time and effort and frustration. And you really need to know what you're doing. So I got to the point that I systematize my business to the extent that I can delegate certain systems in this business to other people, so to third party, and I don't need to be actively involved. Occasionally, I just check what is going on, but I don't need to be actively involved. And that's the way to make your rental real estate business passive one. All right. So again, systematize like everything else, so it will be easy for you to delegate some aspects of this business. Okay. All right. Any questions? I don't see any questions so far. So let's move on to the next item on our agenda, which is some of the common mistakes that landlords make. Okay, and landlord is the person who owns the properties, rental properties, and rents it to other people. So some of the common mistakes most what I call wannabe landlords make are buying rental properties at their own prices, in their own locations, and often at their own time. So that's obviously that, if you buy property at their own time or in their own location, it may create significant financial burden, right? We all know that. So I want you to remember that real estate markets are cyclical, just like stock markets, right? So pretty much all markets are cyclical. So you've got to be informed and mindful investor to succeed in rental real estate business. And not only that, you've got to manage your tenants as if they are your employees. You have to take care of them. You have to take care of their complaints about, property not being maybe in a bad shape, in the best shape, or things like that. So you have to really be very respectful toward your tenants while not being become their friend. Okay, so there is a fine line when you manage properties, because you want to show your appreciation for people who help you to pay your mortgage off. And at the same time, your agreement, your lease agreement should be strong enough for them to understand that you will take them accountable for any damages, and that you expect them to respect your property. Okay, so that was agenda number 4. Any questions? I don't see any questions so far. Great. So next, next I want to talk about one of the key criteria for making consistent real estate income. So one of the key criteria for making consistent rental income is buying rental properties at the right price and in the right location based on both market value and rental income. I can tell you from personal experience, when I just started investing in rental real estate and I didn't know what I was doing, I was buying properties because they seemed cheap, right? So they seemed cheap to me because that was the money that was the amount of money that I could invest in a down payment. What I didn't realize that some of these properties were, not in a good location, to the point that when I just started, I was afraid to go there to collect the rent. Okay, and if you as a landlord don't want to go to the property to collect the rent, let alone that it's not a good way to manage the business. I'm just telling you, when I just started investing in real estate and I had no clue what I was doing, you can imagine that it was hard for me to find tenants who would be willing to live in this location because they didn't feel that it was safe. And also buying property at the wrong price, because the fact that it's it's maybe not expensive could be because it's in a bad shape and you will need to invest a lot of money later on, etc. So you really need to master the art of evaluating property properly, right? How do you evaluate property in terms of value that you're willing to pay for this, so it would be the right buy for you? So all of this, I'm just telling you kind of the important points that I want you to keep in mind. But if you want to go deeper, I'm teaching all of this in my program, brand new program, Grow Wealth with Real Estate Investing. Okay, so the next, okay, any questions? I don't see any questions so far. So let's talk about rental tax exemption, short rental tax exemption, because I know that a lot of people now enjoy using their unused bedrooms maybe in their own houses using Airbnb or HomeAway websites, right? So I want you to know that if you live, at least in the United States, if the property qualifies as your primary residence and it's rented for less than 15 days during the year, the rental income is not taxable. Okay, some people don't know that. So this income will not be taxable. However, because of the reporting laws, companies like Airbnb and HomeAway, if you use these websites to rent your rooms in a house or in an apartment, they may report to IRS all the income that you receive from these short-term rentals that are less or equal to 15 days, even if you rent for less than 2 weeks. Okay, so if something like that happens, I don't want you to freak out or anything like that. Just simply prove the income, that this income qualifies for this 14 days exemption, IRS exemption. Again, this is for US citizens. And yeah, so just keep this in mind. If it's more than 14 days, obviously you've got to report this to the IRS as your active income, rental income. But there are a lot of advantages, even if you have to report this. And here's what I want to share with you next. Next, I want to share with you 10 deductions that are allowed for owners of residential rental property. Again, I'm talking about United States allowed deductions. So just if you live in a different country, check against your local laws for rental real estate. But it will give you ideas what you need to look for, and maybe verify with real estate professional, local real estate professional. Okay, so the first deduction that is allowed for rental real estate property owners is loan interest. So most people have mortgage on the properties, on the rental properties, so you are allowed to deduct loan interest. The second deduction is depreciation. I hope you're taking notes, because this is really important stuff, because one of the advantages of being a real estate property owner is that you have a lot of deductions, which is great. It's a legal way to decrease your taxable income. So the second deduction is depreciation of the property, because obviously your property depreciates in value, in the book value over time, and you are allowed to deduct proportional amount of this depreciation every year. And your tax professional will help you to calculate this amount. Next deduction is expenses that you incur when you need to do repairs. All your expenses can be deducted, which is a beautiful thing, right? All right, so that was deduction number 3. Deduction number 4 that you can enjoy is personal property. If you use furniture, for example, if you rent furnished apartment, or if you use appliances or some gardening equipment, you are allowed to deduct it. Okay. So next is travel expenses. If you have to travel to your real estate property, that is also deductible expense. Isn't it beautiful that you can deduct your travel expense? So just keep this in mind. Then if you have a home office and your rental real estate is your primary business, you can deduct your home office expense as your allowed expense. And if it's not your main business, then maybe you could deduct portion of this. So again, consult with your tax advisor, tax professional, because I'm not that person. I have accountant, CPA who consults me what I can or cannot deduct. But this is definitely something that you should discuss with your tax advisor. The next deduction is if you use contractors to do repairs, so you can deduct cost of the contractors, of the labor, and also if you hire property management to manage your property. So if you want to outsource management of your property to the third party, that's something that you can also deduct from your rental income. Next is insurance. I highly recommend that you have property insurance on your rental properties, and that's also, this expense is deductible. Let me see if we have any questions, ladies. Okay, so I don't see any questions. That's good. All right. So the deduction number 9 is property tax. So in most countries, at least in the United States, we definitely pay property taxes, too high to my liking. But you can deduct property tax as your expense from your rental income. And the last expense that I want to bring to your attention today is legal services. So legal services also deductible expense. Okay, so that was 10 deductions allowed for owners of properties. So now I want to tell you that I believe that rental real estate is one of the fastest ways to financial independence because I'm biased. I'm biased because it allowed me to go from being broke financially and broken emotionally to being financially independent within 7 years. It helped me grow my financial net worth, have multiple reliable passive streams of income, and have freedom of time and location and choices. So some of you who know me, it helped me to create a lifestyle, freedom-based lifestyle, so I can live in 2 countries. So I was able to systematize my real estate business, and now I share this systematized way of having rental real estate. I share this in my brand new Grow Wealth with Real Estate Investing program. So if you want to learn more specifics about real estate investing, I highly encourage you to join my free web masterclass called 4 Skill Sets that can make you financially independent for the rest of your life. I offer this free web masterclass tomorrow, Thursday, June 27 at 3 p.m. Eastern time. And I will share with you the link. I will share with you the link below this video, in the comments of this video, okay? So I highly recommend you to take advantage of this opportunity. And I'm excited to see you with us tomorrow, Thursday, at 3 o'clock Eastern time. Like I said, this is the last training in this mini class series, Multiple Sources of Income. And next week, I will stream live just to answer your questions. So, ladies, if you have any questions that you would like to ask me, any questions about real estate, about stock market, about anything, managing money, changing your money mindset to become a wealth amplifier instead of wealth consumer, any questions that you may have, I invite you to join me next week, the same time, 1 o'clock Eastern time, on my Dare to Change Life page at 1 o'clock Eastern time, right? So thank you very much for your time. I know you're very busy, so I appreciate that you took time to watch this video. And I'm wishing you a wonderful, wonderful day and a great week. And I really hope to see you tomorrow live at my web masterclass at 3 o'clock Eastern. Thank you so much. Be well to your financial independence.